Welcome to the first panel of the City UK's annual conference, which is being broadcast live on Bloomberg Radio. Just as the panellists get themselves settled, perhaps I'll say a few words to start us off. So the title of the panel is Driving Sustainable Growth. Now, a week before the UK general election, Bloomberg's poll of polls continues to show the Conservatives sliding, now 21 points behind Labour, with Keir Starmer's party the consistent favourite and a great deal of outreach to business. Markets are becalmed, expecting largely continuity. Investors are increasingly bullish on sterling, UK equities and the relative strengths of Britain, given more uncertain vote outcomes in France and the US. And yet, the central question after this election will be how to deliver economic growth when taxes are high historically and the government faces costly debt repayments and a host of other significant constraints. Keir Starmer this week indicated that 2.5% growth for Britain was an aspiration for Labour. Bloomberg Economics calls that a laudable goal, but not realistic. And growth is not just the only goal. The UK has also committed to delivering net zero by 2050. Labour want to accelerate decarbonising the economy by 2030. So how does the UK then boost sustainable growth? Our panel is here to discuss. Thank you so much for being with me. And let me just introduce, first of all, Sandra, who is UK chair of BlackRock, formerly an external member of the Bank of England's Prudential Regulatory Committee and a former senior partner at McKinsey. Welcome, good morning. Andy Briggs is Group CEO at Phoenix, of course, the retirement savings and income business. He's led the business since 2020. Emmanuelle is the UK country head of BNP Paribas, formerly Chief Compliance Officer for the Americas. Welcome. And Mark Dwyer is partner and global co-chair of the financial services, I should say, at DLA Piper. Welcome. Former partner also at Slaughter and May. Just brief bios. Let's dive into the questions, though. And I want to start with you, Andy, if I may, from Phoenix. Do you think that 2.5% growth is a miracle number?
Sorry, 2.5% growth.
Economic growth for the UK, a miracle number? How would you describe it?
I think driving economic growth is going to be hugely beneficial to society in so many ways. And what we're particularly focused on as the UK's largest long-term savings and retirement business is how can we deploy our customers' money to get them good returns, but at the same time benefit broader society at the same time. So I think if we're able to do that, if we're able to leverage the customer savings to get them better returns and drive economic growth, then I think that puts us in a strong position to drive stronger economic growth across the UK.
Okay, a brief follow-up. Of course, Phoenix signed up to the Mansion House Compact, which is all about increasing investment in unlisted UK companies. How could we take that forwards after the next election?
So it's a really good example of exactly what I'm saying. So in the UK, we've got 4 out of the top 10 best universities globally for innovation. We have fantastic innovation and ideas coming out of our universities, a lot of which will be very much in the sustainability space. But then we don't end up funding those startups through the various stages of growth. It's overseas capital that does that, which means other countries' pensioners get the benefits of the higher returns generated, but all too often those businesses end up moving to those other countries and the UK doesn't get the economic growth benefits. So the Mansion House Compact is basically saying we've got about £1 trillion of defined contribution savings in the UK, and we think that we should look to put typically 5% of that into these startup type investments, particularly in the sustainable and infrastructure space that has a multiplicative benefit for infrastructure. So that would be about 50 billion. That will be transformational in terms of creating that next generation of businesses. And what the key point here, firstly, it will get better returns for customers. So over the last decade, the pension returns for Canadians and Australians have been real returns of 5.2 and 5.5% per annum over the last decade. The UK, our customers have only got 4% net return. Yeah. Over a lifetime of saving, that's a third more. But also we have this fantastic innovation in the universities that we're not taking advantage of. So it's a great example of how the pension sector can really help get better returns for customers and stimulate much stronger economic growth.
Okay, interesting. Emmanuelle, may I bring you in? Do you think that the UK, I mean, a lot of the focus around the general election is that simply having a new government in place will deliver more stability and that will power growth. Is that your view at BNP Paribas?
So I think that, I mean, it's obvious that the UK will benefit from a little bit more political stability. So I think that if the new government, well, it seems the Labour is a little bit more ahead, of course, and is likely to be in, can have a very stable policy over the next 5 years, it's definitely going to help. I think we need to have more stability, more predictability, policies that are consistent across the different areas of the economy to make it happen and to make the success happen. So I'm not going to comment on the 2.5%, but I do think that it can only be delivered if there is that consistency in the policy framework. And also, of course, in engaging with the different external partners on the trade side. And there's, of course, a will to rediscuss with Europe, which is a natural trading partner. So I think that which also comes back to the scaling of companies, because the scaling goes also with the natural market they can have. So if there's hurdles in terms of their possibility to trade with the first neighbors, it doesn't help them grow either. So I think all this is going to be very important in terms of having a consistent framework for the next 5 years, because things do not happen in 6 months. So you need a little bit of time.
No, absolutely. And there'll be a first test for the new UK government in the first couple of weeks when they come in, of course, because the European Community meeting will be happening in the UK. So all of those European leaders will be here meeting whoever the Prime Minister might happen to be. I wonder what your reading is on London versus Paris at the moment, in terms of the flow of bankers post-Brexit.
Difficult for me to comment on what's happening in France at the moment,
sure.
Obviously. Well, I think it's a setback, of course, for Europe and for France in particular. I think that London versus Paris, I think it's two big financial places, honestly, and I think there's enough room for the two of them, in particular if Europe can make it right and make it globally a very good place to continue to invest in. I think there's going to be enough room for everywhere. I mean, London remains a very huge financial place to invest in and is still attracting a lot of foreign direct investment, including in financial services. So I think it's very positive. I feel more positive than what we sometimes read about it. But I think Paris, we will see what happens. The problem is at the moment, it's so uncertain, the results of the election. And if the result is not going in the right direction, there's going to be some, probably a little bit of slowdown in the investment in France, but we will see what happens.
Okay, interesting. And Marcel, you were telling me only this week that, of course, London isn't just a European global centre, it's an international one. So I'll put that into the conversation as well. Sandra, let me bring you in at this point. In terms of your views, what are the roadblocks to growth in the UK? Are they simply well known enough? What are the mechanisms for trying to get them out of the way?
Well, look, I think that there's both many good things happening in the UK right now. Really great green shoots for momentum in the UK, but also there are roadblocks. So if we take what's going to stimulate productive growth in the UK, what we need is primary investment. So we need those savers and pensioners that Andy was talking about to receive attractive returns from investment propositions that make sense by the companies that are driving innovation and doing net new things. So what does it take? How do we unpick that? If we think about individual savings, the good news is the UK has done a fantastic job with auto-enrollment, but we can also compare the US and the UK. Retail investors have only about 67% of GDP in the UK. That number's 273% in the US. So the policy roadblocks, well, we're happy that LTAF is happening, but we see a really big opportunity to get the advice regime right for the mass market. We really see that as a critical unlock. The FCA is working on that, but we want to make sure that all pensioners and individual savers are able to access, a great array of simple and affordable products. The other place I would say when we think about roadblocks, if we think about infrastructure capital is critical to the future of UK growth, and that's whether it's green energy infrastructure, but also broader core infrastructure. We've seen, a fantastic history in things like offshore wind. The policy leadership that the UK took was great, But we really, really need now many more mechanisms to ensure, Andy alluded to it, that we get more shovel-ready projects, investable projects that are ready. That means really seriously tackling any of the impediments to planning. That is one of the most top priorities. We know that that's something that's being discussed by the Labour Party. So that is definitely critical, but that is something I think we really, really need to focus in on. I would also say on the roadblocks, like we do need collaborative, proactive, consistent strategy by our government working with industry and business. So we need to know what is the direction of travel, what are the strategic priorities for the industries that we care about, and we need to know within those industries, what are the commitments the government's making. Uncertainty for business leads to a deterrence of investment. These are very long-term projects if we want to get the kind of growth that we need. And that kind of 2.5% historically, that is an attainable number.
Is it? Okay, that's an interesting point. I mean, long-term economic growth in the UK has been sliding. It's only in the ones now over the last 5 years, if you look at the calculations. An interesting point. Mark, okay, so then in terms of other issues, there's a bit of a ping-pong about whether regulators are to blame, whether the regulatory framework is difficult in empowering sustainable growth in the UK, an area that you deal in. Do you think that the regulatory burden in the UK is going to increase or decrease in the next 5 years? How important is that when you think about, the title of the panel, sustainable growth?
Well, again, it is, of course, about making sure that we have predictable regulation. I mean, we've obviously seen the sort of from the Mansion House report, and then obviously what the Stock Exchange have been doing, what the FCA has been doing, trying to drive more openness into our capital markets and to encourage more investment there. And that really does need to happen in terms of ensuring that the UK's capital market remains something that's attractive. We're reading weekly about companies considering where to list, whether the UK is a listing venue, the number of companies leaving the stock market. But that's not only about regulation, it is also about the wider economy, having a sort of background that actually supports it. I mean, I certainly agree that making sure we've got the right things to invest in the UK is key, but also then trying to make sure that the UK remains a competitive capital market. And is actually, and there are lots of things, even just in our listing rules and the listing requirements. We've seen points around related party transactions. We've seen points around disclosure regimes, and you're talking about startups and encouraging them to stay in the UK. The level of disclosure required for new companies and so on. There are lots of things that can be improved if we want to really make the UK fully internationally competitive. Because one of the first questions we get asked by somebody looking to list a company is which market to list on, and we end up doing comparators between the different listing regimes, and the UK doesn't often come out particularly favourably on some of those when you compare just the requirements of being a listed company.
Do you think we're over the worst of it then? I mean, Bloomberg hosted the business debate on Monday, TV and radio, with Reynolds and Badenoch. There was talk of Shein, which is one of the new IPOs. Let's leave aside the politics of whether that will or won't happen. Do you think the worst is over for capital markets?
Well, it's really improving. I mean, and the mood music is a lot better, and and we have actually seen. Without naming the companies in the examples, but we have seen examples now of the regulator taking a better, there is a more open approach. We had a recent example where London was the most flexible market on a transaction, more than Ireland or Luxembourg. So again, that's very encouraging to see. Obviously, with a new government potentially coming through next week, we'll have to see how they react, what they do. But there's a lot more than just regulation. I mean, we obviously can attract more funds into the UK through tax regimes as well. And if you talk about international competitiveness, one of the other drivers of capital is what's the fully risk-adjusted post-tax return. And obviously the US is putting massive incentives. Money can invest globally and looks for the best return available, and right now, if you're talking about ESG type investing, the US is obviously incentivizing that in ways that we're not.
Yeah, and the Institute for Fiscal Studies was saying that only this week, that they were very disappointed not to see actually more reform as part of the manifesto pledges, albeit the manifesto pledges are very thin, but they were disappointed not to see a bigger commitment to actually reforming tax, which I think is interesting. In terms of how much optimism there is going to be in the next sort of 18 to 24 months. Miles was saying to me this week that actually the cliff edge may be in 18 to 24 months, you know, that there may be a lot of energy as whoever it is comes into office and tries to revamp things, but it might be 18 or 24 months down the line that things might get more difficult. Andy, what's your view about, you know, whether there is optimism for the end of this year?
I think we need to be optimistic. I think we have fantastic skills and talents in the UK. I think we need to be optimistic and front-footed. The bit I'd add in terms of the sustainable growth side is let's get a national transition plan. If I give you some simple examples, we now have offshore and onshore wind producing power much, much cheaper than fossil fuels. But the national grid isn't robust enough to take it from where it's generated to where it needs to be. So what's the plan to improve the national grid to bring that about? Because you know, we would not have had anything like the cost of living crisis we had in the UK if we had far more renewable energy and far less reliant on overseas oil and gas, just as an example. So what I'm really keen to see is a kind of holistic end-to-end transition plans across the different areas. The second biggest emitter of carbon in the UK is the property housing stock. Yeah. So what's the plan to retrofit houses with ground source heat pumps and so on and so forth? We'd love to invest in it all. We invest a lot in these areas. We've invested £500 million in sustainable investments so far this year, a range of different projects. We'd love to do more. But it needs all the different elements to come together as a whole. And that's what I think we need to see going forward. But I think we need to be optimistic and take these challenges on. Yeah,
but it's about the mechanisms, isn't it, of how that's delivered. Sandra, I wonder whether, I mean, all of the infrastructure spending and these big ideas, the manifestos, albeit costed, when you break it down into the weeds, they didn't really detail the sorts of investments that would be needed to sort of deliver growth in the UK. Bloomberg Economics' assessment is that borrowing for capital investment might be possible to boost growth in the UK, i.e. we could avoid another Liz Truss moment if we did borrow to invest. How possible do you think that is? What's your assessment? You know, if we want to deliver public-private partnerships, however you want to name them, how possible might that be?
I won't make a comment on what the government can afford to do, but what I will say is that there are excellent examples of what other countries have done on this sort of public-private partnership. So we're involved in two. New Zealand is working with us. We're raising a $2 billion, let's get the unit right, $2 billion fund to help decarbonize New Zealand with the support of the New Zealand government. We have a climate finance partnership where the French, German, and Japanese governments, as well as private investors, have come in to do decarbonization in emerging markets. In each cases, there's concessionary capital involved in order to stimulate private investment. So that concept is one, and we've seen some discussion of a national wealth fund in the UK. So we do think there's a real unlock potential. I mean, like Andy and Phoenix, BlackRock has invested extensively already in renewable power in this country, often when it is simply a right thing to do from an investment perspective. We have 48 different solar and wind projects. That's 230,000 houses worth of clean energy every year. There is much more that can be done, but we do need to be realistic about the fact that the stimulation that comes from, for example, the European policy, the US policy, that is a competitive force. And so we do, in this country, need to think about what is our mechanism for stimulating that kind of investment.
Emmanuelle, how do you see then the idea of private finance being required to align with the goals of the Paris Agreement? I mean, that is a big thrust, isn't it?
Well, I think I'm just going to relay probably what Sandra just said. I think that, first of all, I think the UK should be quite satisfied with already what they have achieved. I think the UK has been quite at the forefront of the net zero journey. The UK has been decreasing its emissions by half. since 2010. So it's been a great achievement when France actually did minus 23% and the US 0. So when you compare it, it's a great achievement. So I think that, you know, there should be some satisfaction around that. And to come back to a few things that the panelists have said, it's really true. There's a lot of very strong academic skills in the country that need to be leveraged. So there are the academic skills. There's also the finance there. And I think really the question now is to put the framework around that to deliver it. But I think we're all aligned on this. I think we really see a lot of people extremely aligned on it. And from a banking perspective, we are constantly dealing. I mean, with BlackRock, we're having a lot of transactions all over the world, and with Phoenix as well here in the housing sector as well. So there's a lot of things that the financing sector can bring to the investors in terms of building what needs to be built. The financial products can always adjust to a lot of things. I mean, the products are not new. It's going to be bonds, it's loans, it's only the features that are changing, and probably also the component of de-risking. So we know that we need to be better in analyzing the kind of risk of each of the project to make sure that we can make them bankable, but there's definitely room for that. We are also having a lot of projects in microfinance in other countries. So microfinance, blended finance, traditional loans, traditional bonds, all this can be at the service of the transition. And there's nothing that should prevent that.
Sandra.
I just wanted to add one thing, just putting some of these ideas together, and Andy had mentioned our national grid. It's really important to remember that one of the ways that all investors are supporting the UK is by remaining a consistent, continuous financing partner for listed companies. And I think all of us probably saw a couple of weeks ago, the company National Grid has just announced a $60 billion transaction over time to finance being the decarbonizing agent for our grid and also the Northeast grid. They did a $7 billion equity rights offering, very successful equity rights offering in the London market. That's the biggest equity offering that's happened in London since 2009. So we are actually able to put together substantial investment through all of these vehicles, whether it be public or private. So that, again, gives me some optimism that we've got the mechanisms to be able to do, you know, the full range of investing against, you know, some really ambitious plans for growth, and that growth also enabling decarbonization.
Yeah, I think that is very interesting. I suppose I wonder how concerning the issue of Thames Water and the regulation around that will be in terms of delivering on those infrastructure issues. But yes, that aside, in terms of the private markets, Andy, tell me a little bit more about your focus is also, you're thinking a lot about private markets too.
Yeah, I think in particular, I'd say a lot of these projects are and opportunities are illiquid rather than liquid.
Yes.
So often happen better privately than necessarily in the public markets. Both have a role to play. But I talked about the £500 million we've invested so far this year. So just to give a couple of examples, we invested £80 million in AZ batteries in February, basically creating batteries for EVs. We invested £50 million last month in the Northern Ireland Housing Association, basically creating affordable and sustainable housing at the same time. So I think all of that is a great opportunity. And that's basically against our annuity funds. So that's against our long-term obligation to our customers. We don't need liquidity because we've got set payments over time. And typically we can get our customers 50 basis points per annum higher returns if we invest in private assets rather than public assets. And that's effectively the illiquidity premium. So you get a win-win there. Customers are getting a better return, and we're getting the investment into infrastructure. And Mansion House Compact is a version of that for the earlier savers. Annuities are later life products for the earlier savers. So those two alone. But the UK needs to spend £2.4 trillion by 2035 on the journey to net zero, so 2.4 trillion by 2035. The pensions and insurance sector can do half of that, we think. And so there's just a massive opportunity there, but there aren't yet enough projects for us to do as much as we would like to do. We would happily invest the £500 million we've done so far this year. We'd happily make that more like 2 billion. That's what we would choose to allocate if the projects were there. And that's where these end-to-end transition plans come in.
Mark, in terms of then how you think about that and how your clients think about it, in terms of delivering returns for clients versus the fiduciary duties that firms will have, how do you think about that balance?
I mean, that's a real live issue at the moment in the whole ESG market, and you've seen the move away almost from green funds because of where the sources of capital are. I mean, we've got different challenges for different industries. I mean, obviously the UK pension industry and the duty on pension trustees, the prudent person investment really means that the actual underlying investment needs to be something that is worth investing in. Now, that can be just because it's a very good project, or you could have various forms of incentive to come to that. You could, if there were refundable tax credits in some way that pension funds could reclaim, that so you look at the post-adjustment return, that would be something that would incentivize. I think people have talked whether you mandate investments, but then that's a fairly negative thing in a way to basically say we're actually going to dictate what you do with savers' money. But those are ideas that people have put out there, but not sure that would necessarily be welcomed by lots of people. But in terms of driving that investment, a lot of it, we need to sort of realise that sources of capital, in the US, for example, a lot of sources of pension money, international institutional money, again, they're running in the US, again, the same fiduciary issue, which is basically their duty is to get the best available return. And anybody who tries to say that we're doing it because of a sustainable reason, they feel that that's almost exposing those investors to legal risk. I think we would typically say, sustainability is a financial factor. It can be taken into account in the total return, but ultimately, without any changes, the project itself needs to be something that is worth investing in. And if the UK government really wants to drive more capital in, it needs, as you say, predictable, sustainable projects that you can actually see will survive, deal with planning to make these things more likely to actually get off the ground, so they're worth investing in from the start. But then do think about other possibilities. I mean, one of you asked about the actual ability of the UK to raise money for sustainable investments. I mean, again, a lot of people think, provided it is tied to actual capital expenditure and not to fund a tax break, then that is something that markets would probably support. But also, if you use that sort of incentive to drive capital into the market, then we think that is something definitely worth doing, and we can see potentially on a post-tax. But again, back to that, you try and align the incentives to drive the investment into the areas you want, and that's certainly something that should have effect.
Okay, I can see my panellists very keen to jump in with their own responses. Do send in some questions if you have them. I've got the iPad up now. Emmanuelle, you're keen to reply.
Very quickly, I just wanted to add something, which I think that in this transition, one of the things that is absolutely critical to accelerate it is to train people. So it's very important to actually train people everywhere in all our organizations. I think it's very important. So at BNP Paribas, for instance, we have dedicated specific training. We have already trained, at least quickly, with some specific things that are easily to access, half of our staff. That's 100,000 people across the world. And we also have built, groups of specialist engineers that are specialized on low carbon transition, because one of the things is that it's true that from a technological perspective, it's complicated. So I think it's important to understand, and for the private sector to take risk, it's important for them to understand. So I think that the risk taking, it's important to take risks, but we also need to take that in an informed decision. So you need to have people who are savvy and knowledgeable to be able to take those risks. So I think that all organizations need to also train their staff, both on the government side, by the way, and on the private side. I think it's quite critical.
And I just wanted to build on Mark's point. So it's absolutely essential that all of us are investing our customers' money where it will get the best return. So that's what we must do. and that is absolutely paramount. But the UK only invests 14% of its pensions and insurance monies into these productive assets, these private assets. The other 7 largest pensions nations globally invest 20% compared to our 14%. And what that means is our customers are getting lower returns. And it comes back to what Anne was saying earlier, that we have this risk aversion and this obsession on low charges. Low charges are important, but it's the overall outcome for the customer that matters most. Investing in private assets does cost more than public assets, but the returns, net of those higher charges, are higher. And other countries have had those higher charges. So imperative we do what's right for customers, but we must get away. It's more risky to invest a 25-year-old's pension monies in a very conservative way in terms of the real return they will get in retirement. So having a much more diversified range of investments will be lower risk and get a better outcome for the customers. And that's what other countries do, and we haven't done.
Yeah, I think those are some interesting numbers and comparisons, aren't they? Just want to remind our listeners on Bloomberg Radio that you're listening to a panel here at the City UK conference live in London. Andy Briggs there, the CEO of Phoenix, was just answering that question. Emmanuelle is also here from BNP Paribas, Sandra from BlackRock, and Mark Dwyer at DLA Piper. I'd like to send it out to the floor for a few questions, starting with one on the iPad, which I think is really interesting. Should we stop talking about the cost of net zero transition and start talking about the economic growth that transition can deliver, led by the private sector within a clear government transition framework? That is a significant question, isn't it? I mean, perhaps even I was guilty of that, of talking about the costs rather than the benefits. I wonder, is there anyone who has a thought on that question?
Yeah, I mean, I don't disagree. I think you need to have an awareness of the cost because it needs to be funded. But the point is there are substantial benefits. You know, if we have better housing, more affordable housing, sustainable housing, if we have better infrastructure, better train services, as someone who was stuck in Coventry for 3 hours last night trying to get back to London, if we had better train services, the multiplicative economic benefits of that would be significant. So I think there's a real win-win opportunity here of the investment getting better returns for customers and making the UK a better place to live, better economic growth, better living standards, better housing standards. I think there's win-wins in this.
Yeah, although I was at the party conferences in the autumn, you know, when HS2, part of it was dropped by the current administration. So, you know, there is a big focus that the UK's found it difficult to deliver on those long-term infrastructure projects. I wonder how hopeful you are that the government is, or the future government is thinking about not just growth, but also sustainable growth. How do you see the interplay between those two words? Because I hear a lot about growth and I hear from the industry a lot about sustainability. How much are they paired together, do you think, in the minds of our leaders?
Well, I mean, I think it's. I think it is growth opportunities. I mean, in many areas. I think that so. There's no doubt that there's growth opportunities in the transition. I think that, but there's also a cost linked to it. I mean, we need to understand that. And according to the industry, the cost of the transition is different. So I think that's an analysis that needs to be done industry by industry in order to be able to achieve it. But there's definitely opportunities in that. And I think that there's opportunities in finding new markets, new products, new customers. So there's definitely a benefit to the transition. But again, it depends, the analysis is specific to each industry.
How does artificial intelligence fit with sustainable growth? May I go to you, Sandra?
Well, look, I think, coming back first, just to follow up on this, I do think that, you know, the objective of any government would be to say, I need to accomplish growth for this country, and in that context, I want to meet that commitment to net zero. If we look at priority industries, energy, technology, infrastructure, all of those are intertwined in delivering growth and also delivering a net zero objective. But we also know that creative industries, finance broadly, and life sciences will have tremendous growth potential, and that potential is not necessarily tied to net zero. So I don't think we should be only thinking about those industry opportunities that will drive net zero, but collectively, those 6 industry sectors can do tremendous things for the growth of the country. Now, the role of AI, I mean, from our perspective, AI is now embedded into how business is being done. So when we look at the applications in technology, obviously, it's transforming every technology company right now, but life sciences, the applications are extensive. Financial services, the applications are extensive. So from our perspective, the ability to get productivity gains in Britain, if Britain is able to be a leader in thinking, we have incredible universities, great intellectual capital here, that could actually be quite an engine. There is a connection, of course, in that we will need to have better data center infrastructure in order to support more technological activity, more AI, and so there is a connection with that. If we build those data centers in a green manner using renewable energy, that's the kind of interconnectivity we need to think about.
Yeah, I mean, Andy, you were talking about, the need to nuts and bolts, decarbonise houses and so on. I mean, if we then go and build a lot of AI data centres across the UK in often more rural centres, that's also going to pose a challenge, isn't it? How do we get the productivity benefits without the kind of damage to our net zero goals?
I mean, you need to look at it holistically, though, don't you? Because, so using more, data centers, using more tech does use more power and energy. It doesn't come for free. You need to reflect that. But if you make stronger progress on producing more clean energy to fuel and fund it. So you need to look at it holistically. And back to the question on growth and sustainable growth. Growth that doesn't promote and advance ESG is not a bad thing. There's a number of areas where that needs to be done and is beneficial. A lot of AI examples would be that. If all our businesses could be more efficient, even if it wasn't negative to being green, but it wasn't positive to being green, but our businesses are more efficient, then we are going to generate better returns for our investors. They will then have more money to invest in more things. There'll be more, one of the biggest challenges I hear listening to businesses is getting the workforce they need, getting the labour force they need is one of the biggest challenges. Well, if we can get more efficient, then we can retrain and redeploy people into other areas that, again, would drive stronger economic growth. So I think you need to look at the system holistically.
Okay. Going back to Bloomberg, we love data. The Grantham Institute is saying that the UK needs 3% GDP, i.e. £77 billion overall of investment in order to reach net zero. Is that the right kind of ballpark? 3% of GDP is a huge figure. Is that too much, too little? A comment on the numbers? Emmanuelle, you're looking more doubtful.
No, I cannot comment on it. I think it's difficult, and I think there's also, as we said, technology is a big part of it. And we don't know yet what technology will entirely deliver, but we know technology will deliver a lot. And sometimes technology can be exponentially, productive, and sometimes it's just slow. So it really depends. I think it's difficult. I'm not going to comment on the number. I think the number of the Labour is 4.7 billion a year in their plan. That's where they intend to invest on the transition. Well, is it going to be enough or not enough? We'll see. Now. But to come back, I think we also need more data in order to fine-tune those numbers. So we're still on a learning curve.
It's certainly right that technology may be the solution, right? I mean, if we can fix storage, if storage of power can really find a solution to that, then all the renewable energy, you can store stuff when the wind is blowing, and then you don't need the fossil fuels. You can, that may well be a route. So investing in technologies. You talk about universities. I mean, the university sector it needs more support for university research. And if that, again, funds, you may fund, if you really want to move to an AI economy. I mean, in terms of data centers, where they're located and latency is really important as well. So they need to be near the financial centres anyway, just because of how they work. But and again, you need to deal with planning as well as the grid for that. But I'm hopeful that sort of things like storage technologies will develop to a stage where actually all of the green, we can end up getting to sort of more green energy without necessarily needing lots of sort of tidal investment and so on, where the technology is not quite there yet. But the UK is an island with a lot of wind in parts of it. We should have all the things we need to have green energy completely if we can fix storage. So.
I also think it's worth our looking at other countries and innovative examples that we can import.
Yes.
Because again, the breakthrough technology from our perspective at the BlackRock Investment Institute, breakthrough technology is critical. It's even in some cases more critical than having the right policy. So just taking two examples, we've done a joint venture with Occidental Petroleum, Stratos, to build the largest direct air capture center in the world, 500,000 tons per year. 500,000 tons per year of CO2 that can be captured through this facility. Vanguard Renewables, again, a US business, it is turning agricultural organic waste, to interpret that as you will, into natural gas. That is something that could be very, very powerful from a technological perspective when we think about how do we decarbonize the UK's agricultural industry. So I do think we need to be thoughtful about, it's not just big numbers. Talking about big numbers is something that has to happen, but I think as businesses, what we really want to do is concentrate on the specific opportunities where our investors who are seeking returns can meet with innovative projects that are going to deliver returns and that are also going to deliver some of these objectives.
I couldn't agree more with that. Let's not spend forever pontificating on the theory of the numbers.
Yeah.
Let's actually get doing some stuff that will make a difference, that will employ people in good work and generate good returns for customers. Yeah.
But on that, a question from the audience, are you worried as the panel about the politicisation of sustainability? For example, in the US, is the question on the iPad. But also I would add to that the FCA in the UK is now getting a lot tougher on companies and their green, or at least scrutinising what green and sustainable claims people might make. So is there a politicisation of sustainability that worries you? From the audience, maybe Andy, would you answer?
I'll comment on the UK as we're predominantly a UK business, and I think there is merit in having decent regulation around this and clarity. So if you take accounting standards, we have international financial reporting standards, IFRS standards that standardise how things are reported. I think it's helpful to get something similar on sustainability so there is a level playing field and consumers understand what they're getting. So I'd say from a UK perspective, I think it's good to have some regulation and some standards. I think that's fine.
Another thought, if there was one quick thing you could ask the new government to do to unlock sustainable growth, what would it be? Maybe Sandra or Emmanuelle?
One quick thing?
Quick thing, yes.
Well, day zero planning. That is planning permissions. Yes. That is the day zero. The other quick win that we love, so we've talked about getting more pensioner and retail savings into these productive private assets. We have the long-term asset fund. It's a structure that enables access to these private markets. Right now, that's not allowed in a stocks and shares ISA. That's very, very hard to access through the ISA system. That would be a quick win. That's where a lot of our capital markets flow goes. There's an incentive to do it. So getting the long-term asset fund in, that would be a really quick win, I think.
Okay, quick win. Mark, to you, what impact would a second term for Donald Trump have on the global ESG agenda? Huge question, maybe.
Thanks for that. Well, I mean...
Have a go at that one.
Well, one of the biggest challenges, I think, with Donald Trump is the rhetoric and the policy don't necessarily align, actually. I mean, some of his rhetoric is particularly stridently, playing to a particular voter base, but the administration sort of actual policies haven't quite been the same. So he says he would come in and immediately scrap the Inflation Reduction Act. If he did, then I guess that would at least level the playing field for international money to some extent. But it's an if, right? Because it's very hard to predict anything that... there isn't a link between what he says and necessarily what his administration would do.
Okay, interesting. Andy, a question for you. Actually, they put their name in, so that's great. Jonathan Beaverstock, who is from the University of Bristol. You mentioned the potential role of universities in driving sustainable growth. What does the FS sector want from universities beyond graduate pipelines? Beyond graduate.
So I think it's the innovations and the sort of startup ideas that we can then invest in. And actually, I think the universities are doing it great. I don't think they need to do anything differently. I think we need the regulatory changes and the kind of industry changes so that we do start investing 5% of our defined contribution pension savings into these types of investments. It'll give our customers better returns, and then we'll be able to scale these startups in the UK. They will benefit economic growth, create jobs in the UK, but also these startups will work out how can we do carbon capture, far more cost effectively? How can we industrialize hydrogen power? These will be the sorts of things that people are working on in universities that we have the opportunity to then scale. So I think the universities keep doing what they're doing. It's the rest of us need to get our act together to invest into it.
Okay, make that pipeline. And any other thoughts on universities in the UK? How that link is very important, isn't it, between the top universities? Just then, we're coming towards the end of the panel. We've got a couple of minutes left. I might just ask you to summarise maybe a key thought for us when we think about sustainable growth. Do you think, perhaps can I start with you, Emmanuelle, to just give us your top line thought? And a week away from the general election, we're thinking about growth in Britain, sustainable growth in particular. A last thought for us.
Well, I think my key thought would be it's urgent to deliver. And I think that all the recipe for the delivery are known. So just let's make it happen. Because we know, I mean, we discussed it in this panel. I mean, we know what needs to be done on the pension side. We know what needs to be done on leveraging better the academic skills of the UK, which are great. We know that the UK is already ahead, so has been successful. I think we know that the finance is there. So we know what are the recipes. We just need a very great alignment and consistency of all the stakeholders to move in the same direction.
Yeah, perhaps it's a whole nother panel to look back and wonder why those known solutions have not been delivered, but that's for another day. Andy, a last thought.
Yeah, so very similar. There's a huge win-win opportunity here to get our savers a better retirement through better returns and to make the UK more sustainable and growing more strongly. And that what's needed is a collaboration across all the different players and actors within that in a coordinated way. And that's the opportunity I think we have at the start of whatever new administration we have after next week, is to get those different actors together and get that coordinated plan in order to bring that about. And it's a win-win for society, for consumers, for savers, all together.
Andy Briggs, thank you. Sandra Boss, please.
Yes, I guess in sum, we've got 750 billion invested for our clients, UK clients, and a lot of those are retirement savers. They are eager for returns. Many of them have net zero objectives or interested in investing in the transition. So I think they are very much open for business, open for those productive assets that we've talked about, whether that be financing listed companies or unlisted companies through their journey, or whether it be working on these specific private market opportunities that are building the clean tech for tomorrow or scaling up into bigger fundamental infrastructure. So from our perspective, we are ready to work as closely as is appropriate and possible with any incoming government to ensure that we've got a clear direction of travel that helps those investors and also is then helping finance the UK of the future.
Sandra, thank you. To Mark Dwyer.
Thanks. I mean, again, it's the key thing for the new government is just set a very clear strategy, set out the size and scale of it. Our industry then is able to corral funds to fund something, provided we know what it is. If it needs to be ESG funded for ESG commitments, and the money can be raised with that in mind, so that will overcome any regulatory barriers as to what you invest in, and then that will drive the investment. So we should all be really proud to be part of driving the sustainable investment of the future. The government just needs to give us a clear goal, and the industry will deliver.
Okay. Thank you to all of the panellists this morning, and to you, the audience, for listening and engaging so beautifully. Thank you. Andy Briggs, who is Group CEO of Phoenix. Thank you. Sandra Boss, UK Chair of BlackRock. Also, Emmanuelle is the UK Country Head of BNP Paribas. Thank you. And to Mark Dwyer from DLA Piper. Appreciate your time. Of course, the election result will be on Friday morning. Bloomberg TV and radio has full coverage for you. So I hope that you'll join us and listen in to that. It'll be a very interesting next few months. Thank you.
Thank you.